Hey everyone, I wanted to show you a couple numbers here. You know, oftentimes you'll hear financial advisors or even the guys on the radio talk about distributions from retirement plans. And oftentimes we talk about what's called the 4% rule. Basically, this means that if you have $1 million in a 401k, let's say, and it's time to retire, the Wall Street way is to do what's called the 4% rule, which means take out 4% per year. And that has a statistical chance for that money to last the rest of your life. But here's the problem. I hear all the time advisors talking about 8 and 10% withdrawal rates. In fact, literally just the other day, I'm listening to Dave Ramsey. Somebody calls in, says that their husband is looking for some life insurance in case he dies. And Dave asks them how much they need. And they says, well, $100,000 a year. He says, well, then all they need is $1 million death benefit. Because he says, if you take that $1 million, you put it into the stock market or to what he calls high quality mutual funds, then you could take out 10% per year or $100,000, and that would last you the rest of your life. So it was really interesting. I came across this calculator and I wanted to see how true that is. Now, what this calculator has done is it's gone back in time and it's got all the investment data for the last, 100 years. And you can kind of depict, they're called Monte Carlo simulations. So you can kind of say, well, what if I took out this much or this much? How would that look? So what I did is I created this portfolio. It's 80% stocks, 15% bonds, 5% cash. And this is kind of a typical portfolio when somebody retires. You start pulling a little bit more into bonds. In fact, it's even sometimes recommended that you have a lot more bonds, which would make this even worse. But let's just watch this. So we've got $1 million in the portfolio here. Let me just turn on my little pen here. So we got $1 million in the portfolio here. And 80% stocks, 15% bonds, 5% cash. And we want that portfolio to last, I think I got it, yeah, for at least 30 years, okay? That's a typical retirement right now is we kind of plan for 30 years. People are living longer. All right. So now we're going to take out $100,000 per year. Now that's a 10% withdrawal rate. Let's see what happens. Look at this. The results are, it has a 3.3% chance of success. In other words, we take 100 people and maybe 3 of them, this is going to work depending on what the markets do in those 30 years. So that is a statistical nightmare. You can't do that. And think about it this way. Let's say you have $1 million. The first year you take out 100,000, you have 900,000. If that doesn't grow back up to $1 million, now you're starting to withdraw your money on a lower investment amount. And people don't do that. What'll happen is they'll start to panic. If your $1 million in 5 or 6 or 7 years is now only worth 500,000, you're not going to be pulling out 100,000. You're going to change your lifestyle. You're going to reduce it so dramatically, probably living on rice and beans and peanut butter and jam sandwiches, right? Because you're seeing your portfolio and your net worth just decrease. Okay, so now let's go back. Let's still say 30 years. Let's say $1 million. But this time, we're going to take out just the $40,000 a year or the 4%. And we're going to see what happens if we do that. Now, look at this. We have a 96.7% chance of success. So that proves that the 4% rule is somewhat accurate. Now, it's horrible. Don't get me wrong. Think you have $1 million and you can only spend $40,000. Plus, if it's coming from a retirement plan, that $40,000 is taxable. So you might end up spending, what, $30,000, $32,000, $33,000 out of that 40. But you have a 96% chance that it's going to actually occur. So we can't listen to advisors telling us to take out 8, 9, 10% from these retirement plans because statistically, they're just not going to happen. Now, what we want to do is build a portfolio that produces tax-free income that produces 2 to 3 times more than the Wall Street way, So in other words, we really could take an 8 to 10, 12% distribution and have it tax-free. So it's not uncommon to take the same leveraged life program, putting the same amount of money in, and being able to withdraw 2-3 times more than the Wall Street 4% rule. So next time you hear somebody say you can take 10% distributions from your retirement plans, close your ears, walk away. It's just not going to happen. It's a statistical anomaly if you even were able to be one of those 3.3 percenters. Well, that's it for this video. Reach out, ask me questions. Let me know how we can show you how to strategically build your retirement so that you have the cash flow, the tax-free retirement, and you can do it safely without even the risk of the stock market. Until next time, take care.